Hey guys, Mike here. So, oh boy, what a nice green day in the market. And I don't know if you noticed a few things today, but did you notice what the market's really reacting off of now? More of the dollar than the yields, right? Because what have you seen recently? Yields down, market's down, yields green, market's green. What'd you see today? Yields green, VIX is green, S&P's up 0.5%, right? And so it didn't even matter. But because something is happening and it's coming out of Japan, where I really believe it's coming from, which I'm going to show you because I gave it to the members this morning, and I think it's kind of playing out. And so again, when that dollar weakens, that's what you get to see, especially with the Mag 7 and stuff like that. They love that stuff, okay? And so, of course, what else the market like to do? It likes to run up into big news days and data dump days, right? Which will be tomorrow. We'll have a lot of data coming out, which we'll get into. And we'll definitely go in detail on some charts today as well, and I'll show you a few things that are playing out. But of course, we had the jobs data come out this morning. And it was, really a nothing burger. I mean, U.S. initial jobless claims flatlined. Basically, U.S. continuous jobless claims came down. A lot of people think this is because the strikes are over for, the car companies. Also, you got seasonal hiring, so maybe people don't have to file unemployment claims anymore, or not as many. And so it could be something to do with that. Again, we'll get a lot more data tomorrow on this. But when it comes to Japan, when it comes to the dollar and stuff, as I put in this morning's news brief for the members, it says, signs that the Bank of Japan may soon make a major monetary policy shift pivot have slammed Japanese stocks, treasuries, and the U.S. dollar alike. Bank of Japan's deputy come out Wednesday hinted that any exit from the country's ultra-loose monetary policy could actually benefit households, fueling speculation that such an exit could be in play. The governor also said on Thursday that monetary policy management could become even more challenging from the year end and heading into next year, fueling further speculation. Of course, we know they have had yield curve control, having negative rates and low inflation and all that stuff, and they're having a lot harder time with that. And of course, this affects the dollar. And so, if you look right here, you can tell something's going on because this is the U.S. dollar versus the Japanese yen. And obviously, you see a huge red candle today for sure. But that level right there, that's key. Ever since we hit that level, boom, been heading down. Today was just a huge red day, which of course, what does the market love? Loves it. Okay, the 200 kind of saved it, right? But that's the same level right here when we tanked. And so something's going on. Either, again, it's speculation. They're actually intervening and doing something. But it's not good for the dollar, which, of course, the big stocks love, which I'll show you in just a second. But again, something else going on with the dollar, right? You got this rounding top going on. This is going to be an ugly line, but that will kind of be your base somewhere in that range. And you'll see what happens. It'll come down, retest, and reject. So if that happens, we definitely are not getting up in that fair value gap. That is for sure. And then either way, I'll expect a rejection, but it'll just be a rejection even sooner. And when that happens, as you can see, when it's been going green, stocks have not liked it. If the dollar continues to weaken and sell off, the big mega caps especially are really, really going to like it. But you can see, again, we always get these shifts in the market. Sometimes it was yields before because you got these huge spikes and everything. Now it's loving this weaker dollar, which also, we'll see. I mean, weaker oil coming across and everything, which could affect what? CPI coming up here. But you can see it was all about the Mag 7. As soon as we broke out, you can see Google was up. AMD went freaking crazy today. And what sector really loves a weaker dollar? Semiconductors. I mean, they were all super green today. And again, what's at the top? Communications, the Mag 7, and then XLK. And that's all loving that weaker dollar. That's exactly what that is. You can see at the bottom, energy, utilities, anything defensive really at the bottom. Real estate, slightly green. But, your big tech stocks was absolutely on steroids today. Now, and real quick, guys, if you can go ahead and hit that like button for me, help people find this video. I really appreciate it. And if you want to give me a double help today, you can hit that subscribe button if you like the content. When you look over at the indexes, what's happening? Right, very simple. Consolidation. So all you're doing, accumulation. We think it's accumulation. Obviously, it'll be accumulation. It moves up. Be distribution if it moves down. But most people think it's the accumulation right there. Still sitting on that trend line. Not really doing anything. We're up 1% a day. We're down 0.5%, whatever. But not doing much. You can see, I mean, can you say the MACD's trying to roll on a daily? Sure. But I think it's just waiting. That's all we're trying to do is buy time for the FOMC. The Q's just in a range. In this small little range right here. Again, up 0.5%, down 1%, up 1%. And still, where are we at? Same range. We started to tip down right there into the RTH gap. hoping we were going to basically come down and fill the whole thing. It would have been great. Not sure that's going to happen now. But, we'll see. Now, of course, what's happening with the semiconductors? SMH broke out, obviously came down to that level right there, which is a key level. Why is that a key level? Well, if you break out to the weekly right here, you can see that is great support. So that is a great bounce area. So that is why we're bouncing. That's why, and of course, what's the biggest hold on this? It's NVIDIA, AMD, Taiwan Semiconductors. And of course, those stocks have started to bounce over the last few days. They were selling off. And then when you look at AMD, I mean, AMD just a massive day. I think it actually did go up 10%. They didn't even wait to come down to support level. After their AI thing yesterday, I don't know if it's just the AI pump or what this is, but buyers came in full force. And of course, like I said, the semis love it when the dollar is weaker. They absolutely love it. And the reason why mega caps like it, because half their income comes from overseas, and so when they turn it back into American dollar, they get to keep more, right? And so, when you look at this right here, again, it's up in that supply area above that trend line now. Once again, if we can get above that supply area, man, you can just see this thing easily 140. Once we break over the, was that June highs right there? 140 is going to be in the cards, and the way this thing is moving, it'd be pretty fast. But again, let's see if we can get through the supply area first. When you got moves like today, we'll see what happens tomorrow again. And when it comes to Tesla was one of the weaker ones of the day. And this is why I said I wanted to wait till pre-market, right? So if I bring in extended hours, you can see it. What happened? Wasn't doing a whole lot in pre-market, but then as soon as the bell opened up, that thing tanked down, left a huge fair value gap right there. Comes right back up and then just goes in this really tight range. It gets a lot weaker than the rest of them. And of course, when I look at that, I look at that and go, wow, is that starting to go ahead and wedge again right there? And yeah, I mean, you can definitely see that, right? So again, overall, I mean, I know you get tired of hearing me say it, but that's all you're seeing. It's just staying in this range right here, wedging. They don't have explosive 2, 3, 4, 5% move up or down, and then it'll come back in the same range again. And again, this is one of the things, when you look at this, you're kind of like, well, if I look to the left over here, where would it draw to tomorrow? Looking up, I don't really see anything to draw to unless it's going to go to that, where that level you see at the top says prior day's high, triple top. That was a triple top yesterday, okay? So obviously a key level. Here's a fair value gap right here, which is created. So it could draw down, try to mitigate that. That will put it right along that trend line right there, that ascending trend line. But what I'm really expecting is, again, to stay in this range. If it breaks down, it's going to bounce that trend line, mitigate that fair value gap, come right back up, and then start heading to the prior day's high. But then when you look at it, I mean, still, I know you got to be surprised we're still sitting here, still wedging, right? And again, that's going to end on the Thursday the 14th. So that's about as long as it can stay in there for, and then you'll get your big move either way. Now, Apple said, hold my beer. I'm going up, all right? So this one right here went up again. Again, when you look at this thing, you can say that there was a bull flag that's breaking out of. I can see that for sure. To the left is all-time highs. Is that going to end up being a double top? That's what we really got to figure out. Or are we finally just going to blow right through that? Because every time you think this thing is going to go down, it just doesn't. It's Apple, right? I mean, it's worth, its market cap is worth like more than some total stock markets, for crying out loud. So, I mean, just keep that in mind. Then you got Google. Huge day today. I mean, a 5% day on Google is a huge day. And why is that? Again, AI driven. The parent company comes out and says, hey, we're going to end up rolling out this AI model Gemini. And so, of course, they've been awaiting this because it's saying it's faster than OpenAI's latest model and all this good stuff. It can actually process video and audio and text and blah, blah, blah. So this is an AI pump. That's what this is. And we go over here again and look at this. You can see if we draw a trend line right there, that gives us our third touch. That's where we got rejected at right there. So nice resistance, especially at 138 areas. Very good resistance for this one. Again, I'm going to lengthen this out because if it gets above there, that trend line is going to be resistance as well. So good. And you're really looking at 141 if it does break out, which was the October high. And again, when you look to the left over here, that is all-time highs right there. And it's kind of fun when you look at the weekly RSI, you can say, well, that doesn't look too hot. But again, when you get these AI pumps, and if you look at this, 150 is like all-time high. I think it's like 9% from where we're at right now. So it's not even that far, right? You already got Apple, Microsoft, and some others. Obviously, they're broken all-time highs. They're setting at all-time highs. But, all the rest of them are getting AI pumps. Why not Google, right? And so, again, let's look at some others here. We're talking about Shop. Setting this trend line, consolidating. Where's that trend line? We talked about it's going to have major problems getting through this, and why? because it goes back 7 years. Okay, those long-term trend lines are beasts. They're great for support, but they're also really tough to get through when it comes to how they provide resistance and stuff like that. So that's what's happening there. That's why it's consolidating somewhat, selling off whatever stuck between 70, 75 and stuff. When you kind of look at this, it'll have, good support below around 68. Let me take that away real quick and then pull this right here up. And when you look at what it can draw from, if it breaks that trend line, there's still an old RTH gap right there around the $80 to $82 area. So if it does break, start moving higher, because Shopify, it moves fast, like up and down, right? So highly volatile stock, so it could draw to that. But I think really what you might be looking at more than anything else is this thing could sell back down, get to around like 65, 66, where it has support, fill that gap, clear up that fair value gap right there. There's a couple of them on the weekly, as you can see, and then move higher and go ahead and try to push. I mean, that's what I'd rather see if I'm a long-term investor in this, because it's much more productive to do that. But, we'll see. Now, Disney, again, bounced off that 200. Well, we talked about it. If it fell below that, it was going to be heading down to 85, 86, but it did bounce off 200. The 200 is extremely powerful. It provides resistance, support, whatever you want to look at. So again, heading back up to this fair value gap right here, which I think obviously will get mitigated right there. Could reject down. If it rejects down, then all of a sudden you're setting a lower high, right? And so that's something to keep an eye on when it comes to Disney, because again, this isn't a tech stock. This isn't one of the Mag 7s and everything like that. So again, this is something to watch out for over the next few days. If it does end up breaking that high, obviously it's going to be heading towards that trend line right there over the next 4 to 6 weeks, most likely. But again, that trend line is pretty high up there. So we'll see what happens on Disney. Now, PayPal, this is one obviously in that channel, but again, this right here is an anchor VWAP, right? And sometimes you look and say, why is this thing having trouble? There you can see it got rejected. It's got rejected right there. So this thing is providing quite a bit of resistance. And you can see right on there how many rejections you have. And so sometimes you can't figure out what it is. Not a moving average, maybe. What is it? What's going on? See no level. Well, sometimes it can be an anchor VWAP. Pretty good tool to have. But you can see, ugly inverse head and shoulders right here. If you look at it, maybe it plays out, maybe it doesn't. This is Gap City up above us, which can be magnets for this thing. But if it can break through that, get above that 100, then obviously, you're going to start moving. And again, it's not that big of a move, and the thing to watch out for is going to be the 200. I think that's going to be a brick wall for PayPal, like it has been most stocks, right? But that's after you fill 3 gaps, and still only gets you like 65. So not even that big a move. So just, keep those levels in mind. But again, as long as it stays in this channel, keeps moving up. You can see the RSI is looking good right there. Don't see any bearish divergence right there on the daily. And this is looking good. Now, no earnings to worry about tomorrow, but especially when it comes to economic data, there's a whole boatload, and it's all about us, right? So you're going to have a lot of payroll stuff coming out, about our earnings, everything. Then you're going to end up with the unemployment rate, obviously, non-farm payrolls. Everybody loves to talk about that. They think the unemployment rate is actually just going to stay the same, 3.9, which is very surprising, right? And then you'll have the Michigan consumer sentiment, which everybody loves. And this has been getting better and better. And so, we'll see, because right now you got a lot of bullishness in the market right now. And I mean, we were even on extreme greed when it came to one of the indicators I used as far as one of the fear and greed indexes. So, and then we finally bumped back down to greed. But, and that makes people nervous and stuff. But it's just one of those things where this thing's setting up for a big move. Now, you would think to yourself, some things have been priced in here, right? Like the Fed, as far as like them pause, I think that's really what we're pricing in for sure. Pricing in rate cuts, pricing in the Fed pause, maybe CPI inflation is the thing we got to worry about, because obviously if it comes in under or even at what they thought it was going to be, where do you think the market's going? It's going much higher, right? And you would think with oil being as low as it is, been coming down since the last CPI report, that you would at least be in line, if not lower, right? But if it comes in higher, the market's not going to like it very much. So, and that's for sure. So anyway, let me know what you guys think. Please hit that like and subscribe button. Appreciate all you guys. Look forward to ending and wrapping the week up tomorrow. So have a good one. I'll see you tomorrow.